Welcome back. We're still looking at your top business stories, and still with me in studio is Jimmy Moyaha, market analyst at AxiTrader. Well, let's continue and just wrap up our conversation on Taste Holdings. Now, if they do change the CEO, and we've seen them sell off their fast food division, what else will help revive Taste Holdings?
Well, I mean, like I said, they've still got about 54 outlets on their luxury food, their luxury division. So if they go full on into the retail luxury space there, they could look to pick up a couple more stores there. They could look to branch out into a couple of different jewelry avenues that are there, but they could also look to diversify their portfolio and not be so focused on the jewelry. I mean, as we rightly discussed earlier, the jewelry and the sale of that might not happen as frequently as the fast foods, so they could look to then move a lot of their focus and their resources into other sectors that are within the periphery of the luxury market, and they could look to benefit off of that.
All right. Well, let's take a look at another top business story for today. Investor confidence in South Africa is fragile, with the economic growth outlook clouded by a lack of progress or reforms and the energy crisis as well. Well, South Africa had inflows of 17 billion rands in the third quarter, compared with 26.3 billion rands in the second. And that's according to the Reserve Bank's quarterly bulletin. Jimmy, I mean, we have the Reserve Bank's quarterly review that's revised the GDP growth of the country between 0.5% and 0.7%. That's lower than last year. And then, of course, we also have the World Bank's prediction of 0.3%. Who is actually closer to the truth?
Well, I mean, there's a couple of moving parts that you need to look at there. I mean, from a South African's perspective, our government recently issued international bonds worth about $5 billion. And you'll see that what that basically resulted in is that as of October, about 37% of our bonds were owned by international investors, whereas in March of 2018, last year, that figure was at about 43%. So we've seen international investors sort of scale back on the investment in South Africa, and that's resulted in that 9.3 billion rand decline as all that you see. So from a growth perspective, I mean, we'd like to believe that we're going to achieve greater growth numbers, and that's why we're sort of happy to issue the bonds and see our portfolio investments jump in a positive light from that perspective. But from a World Bank perspective, they're sort of looking at it from the other factors that are in place. They're looking at it from the fact that we are facing the potential of a downgrade. We're facing a review after the budget in the new year. So they're looking at it from a different perspective, and the international sentiment around that is a bit negative from there. It's a bit concerning, particularly with what's happening with our parastatals, Eskom in particular, the changes at Eskom, the bailouts at Eskom, what we've recently had happen with SAA. So from a World Bank perspective, that's what they're looking at. Those are the sorts of things they're looking at in terms of factors they think will play a bigger role. Sure. From our perspective, like I said, we're looking at what we're able to do, what we're able to increase, and the production we're able to get out of it. So I think that's sort of, it's not that either party is wrong. It'll just be interesting to see, depending on the policies that the government then come out with and put in place, as to which of the two figures is more attainable.
Absolutely. Well, let's continue with an international view then. The world economy remains subdued, and so we must ask, what impact would this then have on the country's economic growth?
Well, I mean, from a global perspective, that's definitely going to have an impact on it. All emerging market players, all emerging market participants are going to be on the slower side of things from that perspective. And this is not helped by the fact that the trade war is in place. The news out of China and the US definitely affects us as an emerging market economy. I mean, we do 10% of our exports go to China directly. We've had an existing relationship with China for so long. So from a global perspective, whatever happens on that side of things definitely not only affects us, but also other emerging markets, but also from our own perspective, how the world then sees our management of public enterprises is going to be critical, especially going into this upcoming budget in the new year.
And what's the possibility that the Reserve Bank will then cut the interest rates early next year? I mean, we've got household expenditure, which grew by 0.1%. We've got the low levels of inflation, as well as consumer demand.
I mean, they could look to do it in an effort to bolster some economic movements from our side. They could look to increase economic production. But I think that is a small part in the scheme of what we really need to address in terms of, as I said earlier, the parastatals, what we're doing from a budget perspective in the new year, particularly because of the fact that whether or not they adjust the interest rates and that from an MPC perspective, the international community, the ratings agencies have already said that their focus is going to be how they want to see the South African government handle the amount of debt that we've got. I mean, if we look at Eskom for one, they've got about 440 billion rand of debt. That's almost half R1 trillion of debt. That's about 10% of our nominal GDP. So the amount of debt that's there and the bailouts that Eskom is asking for, the bailouts that we've committed to as a government, we've recently as Parliament have signed off another 59 billion rand over the next 2 years as part of their, I think it was 230 billion rand over 10-year strategy for Eskom. So the constant bailing out, the assistance of the state-owned enterprises, them not actually being able to turn themselves around effectively, that's more of a concern for the international community. And I mean, the direct effect of that is, if we are then relegated to junk, the $5 billion of bonds that we've just issued into the international market space become virtually worthless. Yeah. So it's part of a bigger thing at play. So yes, the monetary policy could come out and reduce rates. That'll bolster economic spending from our side. That'll be good for the residents and the citizens of South Africa. But from an international perspective, we're going to need a larger intervention from the government. It's not just the financial ministry or the treasury that's going to be able to do this. It needs to be done from a parliamentarian level.
Yeah. And I mean, everything you're saying about, you know, the bailouts and how the international community is looking at us as we continue to throw these state-owned entities that are struggling with these bailouts. Surely the people in power know all this. They know that we're being watched. They know what implications this has. But then you have, you know, our ministers who are saying, well, Eskom is just too big to fail. So, you know, we'll continue to give them the bailouts that they need. Why is that?
I mean, I think there's there might be a bit of political playing on that side of things in terms of willingness to admit that the approach up to now has failed. Eskom has been the largest producer and the only producer of electricity so far for the South Africans. But I mean, if we look at the government's view on things, I don't want to say that a lot of the opinions that are expressed by our ministries, a lot of the opinions that are pressed from there are expressed from a socialist point of view. But if you look at it from an economics point of view, you do the actual numbers. You look at it from an accounting point of view, you do the numbers. You come to the conclusion that, practically speaking, this is a problem. Yeah. So there's no point sweeping it under the rug. There's no point sitting back, closing your eyes and saying, it's basically burying your head in the sand and saying, it's not really a problem. We don't think it's a problem. Whether you think it's a problem or not, when you look at the numbers, it is a problem. So, and I think that's why the pressure from the international community in regards to how we handle this is going to be so critical. Yes, those that are in power have an awareness of this, but I don't know if they understand the severity of the situation. I don't know if they understand the seriousness with which we need to approach how we handle this. Sure. I mean, we've discussed semi-privatizing Eskom over the last little bit. We've discussed the possibility of splitting it up into, unbundling it into sort of 3 divisions and that sort of thing. And then if you look at the unions as well, the National Union of Mine Workers came out and said they were opposed to that, but then they also said that they don't want the parastatals to remain under the control of the Public Enterprises Ministry. So, I mean, they're not offering a solution. They're just saying, we don't want this, we don't want this, and we need a solution at this point. Absolutely. So we need to bite the bullet and say, these are the solutions that are in place. This is how we implement the solutions, and we're not going to be able to make everybody happy, but we need to look at what's best for the economy at the end of the day, because if there is no economy, then we're all in a bit of a precarious position at that point.
Absolutely. Well, that's also one of our top stories today. It's been reported that the National Union of Mine Workers plans to demonstrate and hand over a memorandum on Andre de Ruyter's first day in office. That's the Eskom's new CEO, and Num has been disgruntled by Eskom lately. Exactly, you know, what can be done in this type of situation? I mean, we've had the happenings at Eskom and interventions that have been announced by the Minister of Mineral Resources and Energy. How will the new CEO be viewing all of this? What can he do?
Well, I mean, for one, before we even get to how he's going to implement changes and all of that, we know that Eskom is already lodged for an increase in the tariffs. They've requested that NERSA increases tariffs by another 16.6%, which is going to be about another 27 billion rand increase. And I mean, if you look at where the consumers are sitting, you look at the fact that consumers are thinking, how are we going to pay more for electricity when we're having load shedding and not technically having electricity? I mean, from one side of things, that's what he's going to need to look at. from Eskom's side of things in the past has always been, let's request an increase, let's not necessarily look at improving systems to increase the output that we're delivering. And Eskom has cited on previous occasions that they feel as though the output capacity that they're able to produce is not meeting demand. And that's what the reason is that they've cited to NERSA for the increase, is that they're not producing enough, and it's costing them a lot to produce, and they need more in terms of the ability to produce. But from a practical standpoint, you have a situation where the mine workers and the actual workers that go and work in the Eskom power plants and work in the coal industry and that sort of thing, they're suffering on their side of things because they're overworked. They've expressed that they're overworked. Sure. You look at the Eskom structure, in terms of the employment structure and all of that, Eskom's increased its employees by about, I think, close to 3.5% over the last 10 years, but they've decreased their output. So they're hiring more staff, but the staff aren't really contributing towards the output. So maybe Eskom needs to look at restructuring themselves as an organization, restructuring how many employees they have, and I'm not necessarily alluding to job cuts or something, but restructuring how the business as a whole is set up. And that sort of restructuring is what the CEO is going to need to look at, and he's going to need to look at it rather quickly, unfortunately, because of what we said about what's coming out in February. So when the budgets are coming out for the new year, and when the Treasury Department comes out and announces budgets for that, he's going to need to have a robust plan in place in the event that, which we know already, our minister, Mr. Mboweni, has already said that he's not interested, he's not keen to bail out Eskom any further than what he's done already. So from their perspective, they're going to need to look at internal changes rather than relying on government assistance, government bailouts. And if that means privatizing some of it, if that means changing up some of the operational structures, we saw Taste went through their restructuring, Eskom can do the same thing. If they look at something like that, we might be in for a better picture from them.
But of course, as he juggles that then, the whole restructuring, he has to also think about getting the unions on his side. I mean, he's going to be welcomed with a list of demands from the National Union of Metal Workers, of Mine Workers, excuse me, but you know, how important is it for him to get these unions on his side so that when he makes decisions like the ones you mentioned, you know, it's not as though, you know, here's the stranger who's now just announced that thousands of people, of Eskom workers, are going to be retrenched.
No, that's definitely going to be critical. I mean, if the unions go on strike, we're not going to have any production. We're not going to have electricity. We're going to have increased blackouts. So it's definitely, I don't want to be in his position. He's definitely juggling between various stakeholders, and in as much as that is the typical job of the CEO, I think it's a little more delicate in this case as well, just purely because of the state in which Eskom is in. The workers want to be looked after on their side. The workers feel as though they've been, like I said, they've been overworked. But on the economic side of things, we need to practically turn around Eskom, and we need to do it either rather quickly and robustly or in a sustainable manner. I mean, what we've implemented up to now has clearly proven to be ineffective. So yes, the unions might be unhappy, but I think the unions as well need to be cognizant of the fact that if there is no Eskom, there is no union for their there's no jobs for their members. So we need to also, it's a bit of a push and pull, and I think I said I don't want to be in his position. I don't envy his position at all. He's in a precarious position, but I mean, we've appointed him because we have faith in what he brings to the table. We have faith in the fact that we believe he's able to turn this around, and hopefully the unions can see it that way as well. Hopefully the unions get on board and see that this is part of a bigger picture. This is part of, it's not just about whether or not we're unhappy with the current conditions, whether or not we're unhappy with the state of Eskom as a whole, because Eskom, as government ministers have alluded to, is such a large part of our economy. I mean, like I said, the debt that Eskom has alone is about 10% of our nominal GDP. And if that's not a wake-up call as to how much debt Eskom's in as a state-owned entity, and the fact that the government continues to give guarantees against that debt, means that the government is putting themselves in that position to say that we will be surety for this debt. So from a CEO's perspective, you have to juggle, yes, working well with the unions, especially in this time, but also you need to be aware of the fact that you're there for a particular reason. The previous CEO was removed because that change did not happen, and you need to implement that.
And you're not there to please anyone. Absolutely. Well, that was Jimmy Moyaha from AxiTrader, bringing you all the latest business stories.